Welcome back to Investing Talk Podcast. Today, we're zeroing in on an upcoming earnings report that's got quite a few people talking. Macy's. We'll explore what the market is expecting, take a look at their recent performance, and consider the wider economic context. The goal is so you can walk away feeling really informed about Macy's heading into their next announcement. Before we get started, if you're finding value in these discussions, please do consider subscribing, liking, leaving us a comment. Your support really helps us bring you more insights. And hey, if there's a specific company you'd like us to look into, just leave a comment below. To help us navigate the ins and outs of this retailer situation, I'm joined by our expert analyst.
Great to be here. Yeah, Macy's is definitely an interesting one right now. So the key date is September 3rd, 2025. That's when they're scheduled to report. And it'll be before the market opens. Then there's the conference call, 8:100 a.m. Eastern Time. That's often where you get the real color from management.
Right, the call is always key. So what are the headline numbers analysts are watching for? Revenue, EPS.
Okay, so the consensus for revenue is sitting around $4.69 billion. And for earnings per share, analysts are generally looking for about $0.18 per share.
18 cents, okay. Any whisper number floating around? Something different from that consensus.
Interestingly, our sources aren't picking up on a significant deviation there. No major whisper number this time. It suggests expectations are pretty well aligned, which is notable in itself.
Okay. And how does that line up with what Macy's themselves have been saying? What was their guidance like previously?
Well, back in Q1 2025, Macy's actually reaffirmed its annual net sales guidance. And what's interesting is they reported adjusted diluted EPS of $0.16.
16 cents.
Which was above their own guidance range. And net sales also beat expectations back then. Management sounded pretty confident about their turnaround plan, their bold new chapter stuff.
Okay, let's unpack this a bit. It sounds like they've had some recent positive surprises, at least against their own targets. What does their recent history tell us about beating market consensus?
That's a good point. They do have a pattern. Looking at the last 4 quarters, Macy's has generally shown a tendency to modestly outperform analyst expectations. Like in Q1 2025, that $0.16 EPS beat the $0.14 consensus. That's a 14.3% beat.
Okay, so a decent beat there.
Yeah. And often this seems linked to how they communicate their guidance. They seem pretty good at setting expectations they can meet or slightly exceed.
Right, managing expectations. But what about the stock reaction? If they beat, does the stock price actually hold those gains?
That's where it gets tricky. Historically, yeah, positive EPS beats have often led to a muted but positive initial reaction, maybe a 3-5% bump right after the announcement.
Okay, a small top.
But, and this is key, those gains have often retraced after just a few trading sessions. So the initial optimism doesn't always stick.
Suggests maybe some underlying skepticism or bigger picture worries. So let's dig into those underlying trends then. What are the key metrics telling us? Because sales have been declining, right?
Exactly. Net sales were down 5.1% year over year in Q1. That's a pretty significant drop. And comparable sales, which is a really core metric for retailers.
Yeah, super important.
They were also negative, down 2.0% for owned stores and down 1.2% if you include their licensed and marketplace stuff.
Okay, not great. But wasn't there a silver lining somewhere? Bloomingdale's.
Yes, that's the really interesting part. Their Bloomingdale's and Blue Mercury segments did show positive comparable sales.
So it's like a split personality within the company.
It really is. You've got the core Macy's brand facing pressure, but these other banners showing some resilience, even growth.
And despite store closures, you mentioned margins and cash were stable.
Relatively stable, yes, which points to some effective cost management, even with the sales pressures.
Okay, so that sets the stage. What's the broader context for this quarter? What's been happening?
Well, what's fascinating here is seeing how Macy's initiatives, like that bold new chapter strategy, are sort of running up against the wider economic environment. They've continued rolling out that strategy store closures, restructuring, investing in omnichannel. They were also at the Goldman Sachs Retailing Conference talking about their progress.
Right. But the economy hasn't exactly been helping department stores, has it?
Not at all. I mean, U.S. department stores generally are facing some serious headwinds. You've got subdued discretionary spending. People are just being more careful.
Makes sense.
Plus, inventories are elevated across the industry, leading to more promotions, more discounting.
Which hurts margins.
Exactly. And high interest rates are still pressuring consumer credit and spending habits. It's a tough environment.
Yeah. Are other retailers seeing the same thing? Sluggish traffic?
Generally, yes. Peers are reporting slower traffic too, though some specific areas like luxury and maybe outlets seem to be holding up a bit better.
So Macy's is trying to transform itself. while fighting these pretty strong economic currents. How are the analysts seeing this? Have their views changed recently?
Analyst commentary is pretty cautious, maybe leaning towards neutral. The latest average price target has nudged up slightly to around $13.22.
1322. Okay. What does that signal?
It suggests analysts think maybe the stock is finding a bottom, but they're not seeing huge upside from here unless there's a really significant positive shift.
So cautious optimism, maybe? Or just caution?
More like caution, I'd say. Sentiment hasn't really shifted much. Consensus EPS estimates and targets are largely unchanged. The market seems to be in a bit of a wait-and-see mode with Macy's.
Okay, wait and see. So what does this all mean for the immediate market reaction around the earnings date itself? How's the stock been behaving lately, and what are options traders betting on? You mentioned the stock was up a bit leading into the report.
Yeah, in the week before, it traded up about 4.9%. So a little bit of positive sentiment building, perhaps, but not a massive pre-earnings run-up.
But then some profit taking.
Right. In extended hours just before, it ticked down slightly, about 0.3%, so a bit mixed right at the end there.
And the options market. What kind of move is it pricing in? That's always telling.
It is. While we don't have specific put-call ratios here, typically for department stores around earnings, you do see higher put volume, suggesting hedging.
Makes sense. Protecting against a downside.
But the key thing is the implied volatility. The options market is currently pricing in roughly a plus or minus 8% to 10% move for the stock after the earnings announcement.
8 to 10%. Is that high? Low? Average for Macy's?
It's considered pretty typical for Macy's and for the retail sector around earnings. Given its history and the general volatility, that's sort of the expected range of reaction the market's bracing for.
Okay, so the market expects a decent move, but maybe not something earth-shattering unless there's a big surprise.
Exactly. It signals expected volatility, but within a somewhat understood range.
So, thinking about those potential surprises, what are the main scenarios we should be considering as the report actually drops? What's the bull case?
Okay, the bullish case really hinges on a strong beat and raise. That means Macy's needs to report EPS better than that $1.18 consensus, hopefully deliver a revenue beat too, and crucially, issue upwardly revised annual guidance. That last part is key.
Raising guidance would be big.
What else? Clear signs of margin expansion or at least stabilization would be very positive. And continued good news from Bloomingdale's and Bluemercury showing those segments still have momentum.
Right, reinforcing that bright spot. Okay, and the flip side, what does the bearish case look like?
The bearish case is, well, pretty much the opposite. A miss on EPS below $18.18, disappointing forward guidance. That would hurt. Also, continued negative comparable sales across the board, or maybe signs that the store closures are having a worse than expected impact.
And margins going the wrong way.
Yeah, signs of margin compression, maybe inventory turnover slowing down, or just management highlighting intensifying economic pressures. Any of those could trigger a sell-off.
So when we actually get the report, what are the absolute must-watch metrics?
Number one is comparable sales growth, especially that split we talked about, Bloomingdale's and Bluemercury versus the core Macy's brand. How is that dynamic playing out?
Okay, comp sales split. Got it. What else?
And number two, absolutely crucial, is the forward guidance. What are they saying about margins going forward? What's the update on the restructuring progress? That outlook often drives the stock more than the past quarter's results.
Right, the market always looks ahead. Okay, so putting it all together, the history, the current environment, the market signals, these potential scenarios, what's the overall leaning from our sources? Where do the confidence levels sit?
Yeah, synthesizing all that, the overall sentiment from our sources leans neutral to maybe mildly bearish. The confidence score we're seeing for a significant positive surprise is pretty muted, around a 5 out of 10.
A 5, right in the middle, maybe leaning slightly negative. Why so cautious?
Well, while management gets credit for execution on cost controls and in those stronger banners, Bloomingdale's and Bluemercury,
Right, they're doing well there.
the persistent negative comps in the main Macy's business, those tough macroeconomic headwinds we discussed, and the fact that analysts haven't really budged on expectations, it all limits confidence and a big upside surprise. It feels like they're doing what they can internally, but that external pressure is really significant.
That makes sense. It's a tough balancing act. So for listeners considering how to approach this event, what are some potential strategy considerations? Starting with maybe the more risk-averse folks.
For the risk-averse, our sources generally suggest maybe avoiding holding common shares directly through the earnings report. Given the uncertainty and that history of gains fading, Perhaps consider limited exposure, maybe looking at vertical spreads in the options market, something that defines your risk.
Okay, limiting risk. And for those with a higher risk tolerance, the ones who maybe expect that 8–10% move.
Well, given that implied volatility, if you believe a significant move is coming but you're unsure of direction, something like a straddle or strangle options play could be considered. That bets on volatility itself.
But if someone is bullish and wants to go long,
Outright long positions should probably be carefully hedged. And really focus on position size. The analysis suggests an outsized move way beyond that 8–10% is seen as less likely unless there's a major guidance shock.
got it. Position sizing is key, especially with potentially limited upside, unless guidance really surprises. Whether you're actually tracking Macy's as an investment or just following retail trends, or even just curious about how these big economic forces play out for iconic companies, understanding these dynamics really does give you an edge. And it leaves us with a pretty big question, doesn't it? As Macy's pushes through this bold new chapter, how much can the success of Bloomingdale's and Bluemercury really offset the fundamental challenges facing that core department store business in the long run? It's a question that goes way beyond just this one quarter.
Absolutely. That's the long-term strategic puzzle they need to solve.
Indeed. Well, thank you for joining us for this discussion. We hope you feel well equipped now to understand what's unfolding with Macy's. We'll be back soon with another look at the topics you care about. Until next time, stay curious and keep learning.